Hi, I'm Davis Johnston. I'm the Senior Vice President of Operations at One-to-One Financial Credit Union in Jacksonville, Florida.
And what are you doing to mitigate long-term interest rate risk?
Yeah, as far as the long-term interest rate risk mitigation, one thing we're doing is we're selling all of our 30-year fixed-rate mortgages, and in order to mitigate some of that, so we're not having a lot of long-term mortgages on the books when interest rates start going back up.
What's your mortgage portfolio roughly?
It's roughly about $75 million, give or take. So.
Well, thank you very much, sir. Appreciate it. Okay, state your name, please.
My name is Dwayne Tatum.
And
with the Irving City Employee Federal Credit Union.
In Irving, Texas?
Irving, Texas.
Okay. Roughly how many assets?
A little over 40 million.
Okay. And describe a little bit what you all are doing to, if anything, to mitigate interest rate risk.
Well, what we've done is that, luckily for us, we stayed out of the subprime. They call it a fiasco. It's my term.
Right.
But we were able to stay out of that. Unfortunately, we still having to pay for some that got involved in it to the organization, but the credit union itself stayed out of it, which was very, very well for us. We don't do the mortgage. We don't do the house loans. What we do is loan for the land itself.
Through agriculture or for commercial real estate?
No, not commercial, just strictly
agriculture.
Yeah.
Okay. Is that mostly ranch land or is it row crops?
It's mostly undeveloped land.
Okay.
You can use it for ranch, farm, whatever you want to. It depends on what it is that you have, use for it. But it is definitely not commercial.
Okay. Well, thank you very much.
You're welcome.
Yeah, I'm Chuck Bruin.
And you're with?
First Entertainment Credit Union.
Okay. Ms. Bruin, what is your credit union doing to mitigate long-term interest rate risk?
Well, it's difficult to mitigate. We recognize the risk of rising interest rates, so we basically pay a lot of attention to our ALCO policies. We have we have our regular meetings. We pay a lot of attention to it. We understand the reports. We make investments that are compatible with the rising rate environment, and we just try to create an awareness around the credit union of the risk associated with interest rate rises.
Because maybe some people might not be so knowledgeable, what does ALCO stand for?
It's the Asset Liability Committee.
Okay.
And we use both staff and volunteers and outside sources.
Okay.
And take it very seriously.
All right. Thank you very much.
Thank you.
Please identify yourself.
I'm Tim McMurray with PowerNet Credit Union in Tampa, Florida.
All right.
And
what is your credit union doing to mitigate long-term interest rate risk?
well, on the investment side, we're keeping our investment portfolio short.
Okay.
Basically been laddering 5-year step-ups for several years.
Okay.
And on the loan side, obviously not going into any long-term fixed-rate loans. And anything over 5 years fixed, we sell.
Okay.
I have been selling to Freddie Mac in the secondary market. If that changes, we'll have to come up with a new plan.
What's what's your loan portfolio, what's your loan volume, I guess, per year, roughly?
Well, we do roughly $1 million a month in new loans.
Okay. All right. Is that mostly purchase money or refinance?
No, today it's about 60-40, refinance 60,
Okay.
purchase 40.
That's still pretty good these days. That's interesting. Thank you.
Okay.